This conference will now be recorded.
Before we begin, we must provide a disclaimer that the following information provided is not investment advice. Our methods, teachings, and content are for educational purposes only. All materials and lessons are protected assets of Market Making Strategies LLC. Right. Hope you all are having a lovely morning. We definitely had some extremely nice moves. But overall, what we saw in the morning with all the volume and all of the movement is literally a lot of exceptional buy. What I've really liked on some of these with exceptional buy, as you can see, with all that buying that we saw in Soon at 22 and 22.50, is how it's holding its levels. That's when you see a lot of exceptional buying and then it stays within the same range of that exceptional buying. As I've told you before, that's also them pretty much saying that that's where they see the fair value of the company at this time. Maybe that's because of earnings, or maybe that's because of the potential of and possibilities of what it can do in the future. So it's very key and very important when we're doing swings and when we're doing options to understand not only what you see within a stock, but sometimes within a segment or sector, you'll see that sector has gaining a lot of traction, a lot of interest. And so to understand what that buying means in short term, mid term, long term is very vital. For instance, yesterday I was telling you in Tiva, it moved all the way from 16.50 up to 20. There was no real trading, but there was a extreme amount of buying at 20. And we can see today, although it's moved nearly up to 22, it's actually continued with quite decent buying the whole time. But with a stock that moves so slowly and that was building in that way with not a lot of retail attention, the time frame can be far longer. So unless it's got the complete complement of what could be short term, mid term, which is an absolute lot amount of different market makers taking positions all over the stock, huge range and funnel and consolidation of buying on the daily, and to have consistent high volume and volume in patterns is extremely important, because at the end of the day, it will and always comes down to what is our volume patterns that we're seeing when these stocks are building positions. Are they the type of volume patterns that can get to the price target quicker because it has that consistent volume? Or is it going into dips and valleys, which means that we now have to have a longer time frame? So that's just a bit of a quick synopsis of what we see. Okay, so what are we doing today? We're going to do a quick case study. I will be resuming the classes in January. We've got the holidays coming up. I need more time just to prepare and tighten it up. There will be some information provided to all the students from David and Millen as well about how that is all going to work. But I definitely know, because we pretty much closed out and met quite a few price targets, with our latest price target in IONQ being 45, and we actually met it on the same day we're doing the case study, which is beautiful. IONQ went to 44.99. Now, yes, you're going to say, well, we had buying at 43 and 44, correct, but it has moved an extreme amount from when we saw it buying at 17 in early November. And yes, that's only 6 weeks ago. 6 weeks ago is when IONQ started its journey. Okay, so let's talk through it. Market making strategies. Through the tape, we learn how the market moves. This is options and swing, depending on whether you took options or you prefer to swing shares, however you decide to play it. So this is going to be IONQ. The prints on the right is just simply us having some examples of prints. Now, one of the things to note in this is you see these beautiful prints of 1999 and at 20, and this would have been back in November. But you can also see that just alone, there's someone who bought 266,000 shares within that at 20. So when you look at that, that's about 400,000 shares that was probably taken out, if not 500,000. So we knew that when this first started at 20, just there alone, you're looking at $10 million somebody had placed just in that one print, in that one amount of take at 20. Miller, move the next slide, please. Okay, so here we're going to keep this very basic, as I said. IONQ timeline of prints. We first saw 17 ask. It was about 3 times. I unfortunately don't have those copy of the prints, but that was early November, and it was around about November 6th or November 7th when I went back to my notes. And it followed by the continuation of acquiring at 19 for a price target of 20. But we knew then that the way it was acquiring was to take it to 20, but with the buying starting at 17, 18, and 19, that wouldn't make sense for it to simply stop at 20. But why do we say price target of 20? Huge psych level. Whenever we have huge psych levels, we want to make sure that we don't just simply put our mind past it, but that becomes your first price target. But as I said back then, it's looking like there's buying in this more for 25 than for 20. And again, if we look at the chart in front of you, now this is a chart that I took directly off TradeStation and my setup. If you look at this, now unfortunately, I don't know why the bottom's cut off, but I can tell you that if you look at between 17 and 20, you're going to see that the volume increased massively to 70 million shares. And that was a huge start. We can see the volume was rather large, above 10. And I remember seeing this, but we didn't have much conditions placed on it. It's when volume really started kicking in around that late October, and I saw all that buying at 17 and a pullback to 15. As I was saying, it printed at 17 2 or 3 times, pulled back on low volume, and then we got massive surge of interest. There was far more market makers and far more retail all showing interest within this stock, within this sector. This was the first one that really moved, IONQ. It's the leader within the sector. So if we look again, now that's early November, if you're looking at that big barb from 15 to 20, that was all acquiring. And that was, as we can see, these are dailies. And throughout that time, we saw massive buying at 17, 19, even at 20. So that was the start of the move. Now, given that was the first initial breakout in volume, we know that's going to be a very quick short-term move to start trading above 20. Now, Milan, go to the next slide, please. So the previous one, as I said, was a very short-term trade. Now, if we look at the next one, now we can see on the next, if you look at the top of the chart in the yellow, the build prints, yes, we had all that buying at 20, and then we had massive buying, especially between 25 and 28. Now, that's a decently tight console between a range of 25 and 28. And if we look at that as a tight range, the volume was dropping slightly, but still extremely high. We see that they were buying at every level. And if you look at the far left, 28, then you see 25, then you see on the right, 27 and 28. Those are just some. I have all of the prints, and I can tell you there's about 15 to 16 major prints at controlling levels between that consolidation. Now, we can see when it's 25 to 28 in quick buying, it's going to be a quick, shorter term move because now it's going to take itself to the next level up, which was 30. If you look at the volume was high enough for that to be short term, and the consolidation was tight between 25 and 28 for a price target of 30. It didn't use 30. If it was building between 25 and 30 and 30 being a psych, that typically can take a lot longer because they're asking for a major psychological level to play a part in the build period, which means that you'd also be asking for a lot of retail to come in and out. When you're building below a major psych level, that's because you really don't want that psych level to matter and you have a far higher price target in mind. So remember that, make a note that when you see the building occurring below large numbers like the 20, 25, and 30, pointing this out to you plenty of times now. When you see that, you know that they do not want that major psych level to play a role. Although it's the price target, they're already firmly believing the valuation is going to be above that. Hence, they do not use that number as much. They build underneath. So when they're ready, They can transact and take as many shares at 30, but the real reason being is that they see a far greater valuation. So when we look at the IONQ timeline of prints for this particular part, after the first price target of 25, we can see the volume is now increasing on the daily, which correlates to far more exposure and interest from investors, both short and long term, requiring a slightly longer build period. And there was a mistake there that meant to say midterm, not long term. Apologies. But what I did want to tell you is yes, the particular build was for a mid or short term move to above 30 with a target of 30, but we know it's going to go above 30. But we can already see that the way that they move to 25 by 17 and 20 and a few prints above, then they take it up a notch and they do the next consolidation, which is slightly longer, but they're building really between 25 and 28, not touching 30. That's something that we want to now pay attention to, that when it does start trading above 30, is it going to use 35 as a level? Is it going to use 40 as a level within its consolidation? So what we do know is that although IONQ within that range between 25 and 28 was definitely short-term, possibly mid-term, never hurts to buy options out 4 months, in my opinion. I never go less than 4 months personally, just because you pay a bit more, but you have so much more time. Time decay in options specifically is one of the major reasons that most people fail to really materialize and profit consistently in their trades, because they want it now. They want everything to happen now. The reality is we don't control anything, so you can't expect anything to happen in your time frame. You have to observe the conditions a market maker is setting, or market makers are setting, for how long they expect to hold it in consolidation, build their position, and then finally take it up a leg to their target. The key in everything, I will again remind everybody, is that volume. The volume patterns will tell you exactly what time frame it's in, along with the substance. So as we see early on around 10, lot lower volume, took a bit longer, clearly because it's low volume, for it to start moving above 10. That within itself took a month between 10 and 17. And then it came back to 15 before the volume that we really needed to see to tighten up the time frame. So once you see that 70 million coming in, and you can see that volume pattern is now changing, that means that you should see far more substance, far more build, but also if that volume remains consistent, you should see that it can get to its price target far quicker. That's how we start understanding the difference between short, midterm, and long-term consolidations and moves to targets. Is not only the substance, but you want to see a few other things. You want to see how consistent is that volume within that consolidation. That's going to say to you how long it will take them to achieve their task. Now, if we move to the next slide, this is where it gets really interesting. Miller, move to the next slide. Thank you. Now look at the top. So let's just read the bottom quickly. IONQ timeline of prints. After the second price target of 30, we can see the volume is now consistently high, and the consolidation is now far longer, and the range of acquiring is far wider, between 30 and 38, meaning presence of more market makers buying positions, and so the price target would also be increased because of the size of the build and the new interest to 45. This now on huge volume pattern, as you can see, stage or phase 3 of volume, now averaging anywhere low as 30 million up to 50 million, now trading or consolidating and buying between 30 and 38, increase the range of buying. So when you increase, initially we had $3 range to get to a target of 25. Then we had another $3-ish range to get to 30. Now we're looking at an $8 build range. So what we know is it can't be 40, but 45 would be a very safe bet, because we know that if you're building between 30 and 38, that's $8 of building. You clearly aren't looking to sell $2 away. That would make no sense. But if you double it, you get 40. Although you get 46, we know 45 is a psychological number. That's where our target was. Now, just type in the chat, everyone. How right have we assessed this trade so far since November 6th? Because that's when the day that the initial buying of significance started at 19. Type it in the room. How close do you guys think we've been on spotting this trade to the 2-hour price targets? Is that me basically to the T, or is that me being a damn good follower, a damn good reader of strategy, and absolutely doing nothing else but finding that my greatness as a trader is in one place and one place only? In order for me to be consistently successful, I have to be a great follower. That is all I can be in the market. Who agrees with that? That our only goal, depending on whatever our goals for trading are, but if we had the ultimate goal, the only ultimate goal you can achieve as a trader in all sincerity and humility is being a great follower. Are you all okay with being a great follower, which means you are great at reading what the market maker is doing and great at following the market maker and allowing yourself to completely and utterly believe in the percentages in front of you, and that more times than none, the market maker will get to his price target? Because as I have always said, I absolutely trust anyone who could put at times tens to hundreds of millions of money on the line. Do you trust that person? Say yes or no. I like that answer, Millen. Sounds like some of your swings are working out too, then. And here's the reality. One of these trades and options that really extends itself and gives us this much opportunity and return on investment, one of these can take care of 10 of your potential option or swing positions that don't work out. But here's the other reality. Since the last 2 months, IONQ, DJT, Sophie, Soon, OKLO, we can keep going on. QUBT, every single one has worked out. SMCI, and not only have they worked out, they've given us hundreds of percentage increase, multiples on top of what our ROI was. So, I mean, on our investment. And the only reason that happens, you just got to focus on the market maker. You got to focus on understanding the strategy being employed. Understand what short-term, mid-term, and long-term strategies are and how they play out. This is the perfect one. If we look at 30 to 38, look on the left, you see the prints at 38. You're going to see 31. But what do you guys think is so significant, and why did I put 31.41 there specifically, even though it's not at a level? Because some of you might look at that and say, well, Doug, that's just a off level, short term. Is that off level or short term? By any means? That 31.41? Who thinks that's a short term, just a small market maker coming to play within the big leagues? Or does that someone think that is a significant hand to be an off level? Answers. I told you guys before, I require everybody to work with me. That's a lot of shares. It's far too big. It's not, I want it now, Millen. That's the mistake. That would be short term. Or is that someone saying that there are so many market makers looking to take as many shares at levels as they can, that when this market maker saw a significant ability to take a massive order out They just took it where they took it, knowing where the overall stock is going to go. Do you think it was more of that? And what does that mean to the trade when you see that? Because when I saw that, do you think that said to me, okay, that's nice, someone just bought more? Does that, my word, how many market makers are involved? And are we lacking the ability to keep printing even with so many outstanding shares? And the reality is, there must have been so many, and there are many market makers in this. Now, if we have affirmed that the buying has now got to hit a target of 45, and when it gets closer to 45, the amount of buying is now less than what we saw in this large range between 30 and 38. And we know this stock has already gone from $5 to $45, which is a huge percentage increase of nearly 900%. What must we also know? What happens when a stock has gone this far up? What's going to happen? And we're at the end of the year. Profit taking. Let me ask you something. If you were the one that bought at 30 and you had 10 million shares, how much are you up right now if you started selling above 40? Don't even say 45. Let's say 43. How much are you up if you bought 10 million shares at 30? If you bought 10 million shares at 30 and you sold around 43, how much profit did you make? $130 million. Do you think somebody's going to want to close that out for the end of the year books? If you're a big bank, if you're a big hedge fund, what do you have to report back to? Investors, big investors. It could be the pension fund, the students fund, the police fund, the fire fund. They have to return a huge percentage back to their investors. So when you've got a position that just went up that big, and you're going to take some profit, it's the end of the year. Number two, never forget micro and macroeconomics. I told you all, and I will be explaining all of this to you in such depth as I go through all the courses next, starting January. But you will start seeing exactly how the option strategy works from start to finish. And when we speak about micro and macro economy, which we will do in my 7-point analysis, we have to consider what's a massive thing that's happening next year. Who can tell me there is a huge event going on in February, rather important for this country? What would that be? Exactly, it's Trump's inauguration. And I always take account of the past. And in the past, we have seen that Decembers can either have a big run and sell in January, or they typically start selling off in December early on and throughout in order to run the market up in January. We're seeing the opposite, and with Trump taking over in February, what do you think I believe that does to my risk versus reward of holding it too long? Even though my IONQ calls are for March 17th, I have plenty of time. Why do you think I sold? Actually, in the end, I ended up selling 85% of my calls. So clearly, if the market is running up in December, and typically that means that January is a sell-off month, especially knowing what's happening in February. But if it did run up and it sold all the way down and new buying came back in, what can I do? What can I simply do? And typically it's going to happen. Nothing goes straight up. And we've had 3 leg ups of consolidation and we're right below 50. If this pulled all the way back to 35 or 30 and buying started again, because we know 30 is a huge psychological number, we know that's where the massive build occurred between 30 and 38, I can just add back on a pullback. Because at some point in your position, the percentage increase will start decreasing significantly. So what do? We take our profits and we find the next trade where we can get quicker multiples, better return on investments. How many of you have been in a position, let's say 4 or 6 months, it ran up 300%. Let's make it easy. It ran up 100% in the first month. You got so excited. You know, if you didn't know how to trade off prints, then obviously you're trading off charts and what have you. But how many times have you been in that position? And over the next 2, 3, 4 months, not only did it barely go up, let's say 110, 120%, but you found yourself at 70, 60, 50% now in the profit. How many of you have been in that position in your options? I know Trevor's been trading them. Austin, are you doing swings or options? Who else is doing options here? Shamsi, yep. Because at the end of the day, what happens when the market makers have met their short-term targets? So anyone who's in short-term or mid-term targets as market makers, what are they going to do when they reach their targets? They're going to take profit. They're going to sell off and be done. And what do we know when market makers are starting to exit their positions? What happens to the stock? Nobody is no longer doing what to it? Controlling it. There you go, Trevor. They stop controlling it. So when they stop controlling it, that stops you from earning because you are following them. So if you see them get out, what must you do, Trevor? If you are following market makers, then if you're following them in, what must you also do? Follow them in and follow them out. I will repeat this, and I said it in the room. Greed is for those who are never looking for wealth. Do you understand what the difference between rich and wealth is? The reason a man is rich is usually did something right in the interim or short term. The reason someone is wealthy is because they have consistency in their habits. They have consistency in their relationship with their investments, with their finance. Do they lust over money or do they lust over process? Wealthy people, do they lust over money or do they lust over process? You tell me, type it in. You guys want to be successful and wealthy? The last thing you ever put your focus in on. I don't care if it's a day trade, swing trade, options trade. Don't care what form of instrument you're using. I don't care if you're doing Forex, crypto, US equities, Australian market, the UK market. I don't care where you go. At the end of the day, it's moved by market makers. Market makers have one intention, that is to make profit for their investors. And once they meet their targets and they have to make their profit, they get out. Do you think when the big institutions go in on these positions that they can sit there and say, okay, there's another dollar, another $2 still made? Or do they realize that the dollar made is because of them? So when they get out, they get out. And the second that they stop controlling, it means that they took their profit. So if they've gotten out and knowing that they can only control the stock, what are you doing waiting in there for? That is easily the largest detriment to being a successful and consistent options or swing trader. If you're going, and I'm talking only off my method, which is based upon prints, because the prints are going to allow you to know when time is in and when time is up. So if you're doing options and you're trading through time decay, is there anything better than following prints? I ask you that. Can there be anything better in the options method When you have time decay, then the people that are actually moving it. There isn't. So when you guys look at like DJT, I paid $1.15 for it. I sold at $18.75. Today, IONQ paid $1.50 or $1.60 for many calls, and I'm selling at $11.50 or $11.75. Is anyone going to be mad at returning themselves 1,000% in 6 weeks? Yes, remember 1,000% in 6 weeks. Now, if IONQ just kept going down, broke 40, broke 35, break 30, do you think I would be sitting with a sellable contract worth $11.85, or could that easily just have gone down to like $4 or $5 within hours? Your whole investment can change right in front of you. And how many of you have looked at it and said, it's going to come back up? There was a little bit of buying at 43 and not realized you didn't follow a little bit of buying. You followed big consolidated buying. You followed huge people that need to meet a huge target. So when those huge people have met their target, now you're holding on by a tooth to someone that has no ability to control that stock, is you being greedy. And the reality is, what could those 43 and 44 prints have been? Couldn't those have just been some short-term day trading market makers who are just taking it to the price target so that they can get out of the majority of their shares? Do you guys think that's most likely the case in a situation like we saw today? I'm not saying that's the situation every time, but how many times do you think that as it's nearing the end of their position and to meet their price target, they would day trade it to where it needs to go before they start exiting their larger positions? Do you guys think that's a possibility? Absolutely. So understanding short-term, mid-term, long-term, understanding how the prints, the range of consolidation and the volume work together to either create a larger price target or a longer term before it meets price target is absolutely important. But the key to it all is you're following a market maker. When you meet your price targets, follow them out. If you see that it's just a leg up for them to build even larger positions, well, now you know your ROI is going to be far, far better. You're going to be in the money. You're going to be dollar for dollar. That is great, but that's also extremely detrimental if your mind is so focused on the money. Because let's just be completely honest. If you put a $2,000 contract option, and now that's showing you 10 or 11 or 12,000 profit. Are you still looking at process 100%? Or are many of us now switching our attention and saying, oh God, that outcome is beautiful. I just made 10, 12, 15K. I can do this. I can do that. I'm a great options trader. It's got more rooms. This is the one. This is going to go to 100. How many times does that enter your mind? Great answer. Happens to all of us. What do you think that does to the percentages of your trade when you start going against the process, where you become outcome oriented instead of process orientated? Do you think that percentage still remains, or are you starting to very quickly destroy your own percentages, wreaking havoc on such a great habit? That's what you're doing. You're inviting in all emotional biases. And how quickly do you start tapping yourself on the shoulder like you knew it all, like you're the one that created all this? Absolutely. Now, Shamsi, if you want to tap yourself on the shoulder and you had done the trade absolutely correctly, managed it as it should, like I did today, and took off 85% right above 44, knowing 45, knowing that buying above the 42, 43 was nowhere near the type that I saw between 30 and 38. Do I sit there and say, oh, I made a lot of money. Oh, I'm a great trader. Or do I just tap myself on the shoulder and say, now that's a great follow? Understanding, go through the case study, conclude everything I needed to, understand where I could have done better, understand where I did well, and then you move on. There is absolutely no opportunity attached to emotions. There is no opportunity attached to emotions. Write that down. There's no opportunity attached to emotions. Sorry for spelling it wrong. So, why do we need emotions? Emotions and the excitement of money and the excitement of emotions is you basically saying, I am more than happy to stay stuck in the mud for longer. If you always incite emotion and if you always look at the outcome at the end of your options play, how great do you think your actual options habit and strategy really is? It's terrible. You're never going to find the correct success in your trading, in your swing trades, if from start to finish, from see to sell, you're not doing it correctly. You're not making sure that it all started as a follower. It started with managing as a great follower. It continued with you reading it correctly. Whether that was taking off, if it told you to take off, adding, if it told you to add, and then completing your swing trade correctly. So that is a quick lesson in IONQ and all the important parts we need to know in the trade. Does anyone have any questions? Please feel free, because that's me done now with this case study. And Milan will be uploading this video to YouTube, I believe, so you guys can all watch it on there. Please share it with any friends or family. If you guys are all making extreme amounts of return and doing really well over the last 2 months we've been open, please allow friends and family who could use the opportunity and be able to support their lives and their families in the same way. You have any other questions? Please feel free to ask me if you had questions about this trade or about anything I've said. Yes, Trevor, but there's a lot of work that's going to be done. Let me just make this very clear to everybody. Starting next year, whether that's going to be February or March, we're going to be doing a huge deep dive into case studies consistently, talking over our trades consistently. There will be a template created for trading, but this will be only for the students who sign up to be part of the community and our options side of it. But Milan will be putting that out there soon enough for everybody, okay? Sid, go ahead. Do you have a question?
I do. Can you guys hear me?
Yeah, can hear you.
All right, perfect. So, Doug, first off, thank you. I mean, this was some of the great sessions for options, and we could see it in play with the quantum sector with all of the stocks in them. Was a beautiful way to kind of see how the prints can be projected for market maker strategies and the targets. What I generally get hung up on is when you look at a set of prints. And I try to start calculating in my mind using print personality and checking what targets would be applicable. I generally tend to lose the long-term overall target, and I typically tend to align with, okay, what's the print personality and what should be the probably a near-term target. Um, what are your thoughts on how to kind of build on that possibly to see, all right, we've got a big burst at 20 or whatever, and now the next obvious target would be 25 and 30 or what have you.
All right. So if we want to keep this basic, as you start seeing that buying, for instance, let's say you see that the range of a particular stock after the increase in volume. So let's say IONQ was trading extremely low volume for years, and its range was 30 cents. Well, it's not going to move because it has no volume. Now let's say an introduction of huge volume comes into the stock over 10. Now we're seeing that with this huge volume, the range is now easily 85 cents. So what we want to see is that when that within that volume and range, if an X amount of buying was enough to suffice for that range, then if that same buying came in on the same volume 2, 3, 4, 5 times, then we know that it's not enough to suffice. We know that it needs more time and more acquiring, because now it's saying that the volume is not enough right now for the amount of buy. That means that we know we got a short-term acquiring done. Now, when it legs up like it did here, and you see the continuation of more volume and more buy, now you have to start recognizing that as it's increasing in value, typically what we see is it's reaching a price target. And it's so far from its initial entry that profit taking should start to occur. But instead of that, if you see that the volume is increasing, there's more attention, there's more buying, now you know that this has far more range and far higher price target. Then when it went into that third build phase between 30 and 38, a larger range, far more huge consistent volume and time, now you got to say, when it initially came up and legged up over 25 to 30 and then 45, we could see that there was every single time it legged up, there was an introduction of new market makers and there was a lot more support from retail. Then you know that it's the perfect mix for market makers to manipulate it and take advantage of what's going on in that sector. So there's got to be a bit of common sense, but just remember when you see it legging up and the activity level increases, which means that there's more buying, more participation. Now you got to say to yourself, they see far more going on. So a bit of common sense is what really differentiates some of this as well. It's not always just stuck in prints and stuck in the obvious. Sometimes it's just using a bit of common sense that why is this going up and there's more and more people buying? Clearly, that's going to increase the target more and more. Now the market makers can work together. They have far more retail. They have far more attention on their stocks. They can manipulate it and make a larger price target than maybe they even initially thought. The people that bought at 17 to 20 had a price target of 25. Maybe that's what those market makers were set up for. The market makers who built between 25 and 28 said, oh, guess what? The interest is there. There's big volume. Now we're going to leg it up. Now, when we get to the 30, 38, we could see massive buying, clear as day, for days. Now you know there's a lot more interest, not only taking it another leg up in a short to midterm time frame, but there's going to be a huge move, and this stock is now, or this sector is going to be on the forefront and is going to continually find that it's going to be legging up and finding new valuations. So it's just basically using simple methods of understanding that you see buying, it has a target, but when it reaches a target and now you see far more buying and consolidation, well, now you know that this could easily increase to new targets because the range is increasing. So as you see, when we got to that 30, 38, we had huge consistent volume, but we also had an increase in range. I mean, IONQ right now is look at the average range. It's $2.66. I can tell you, and I'm going to start taking note of the range increases with volume increases. I think that's going to be a nice addition. But I can tell you, I absolutely remember, because this is something I take mental note of, that in the early stages it had a 75 or 85 cent range. As the volume increased and it would move more, because obviously volume is increasing and there's more market makers controlling it, we can see that the range has already gone to $2.66. If you remember soon, when it was just doing nothing at, let's have a look. I'm just quickly just looking at my computer. But I remember soon when it was just trading between like $4, $5, and $6, but basically all of summer, it had a range of like 20 cents, 30 cents. Now, 85 cents might not seem a lot to you lot, but that's 4 times the range it was doing just 4 or 5 months ago. And you can see today, it just traded nearly $5. Do you guys think soon is going to be looking, and I'm just looking at what I've seen, they're going from 5 all the way to 25. If 20 to 25, let's say, built for a week or two, massive volume, even higher than what you see here, in 160s, 200s, do you think it's going to come back down, or do you think there's an opportunity for this now to leg all the way up to 30? What would you think is more of a possibility? Do you think they're buying, coming together and buying at the highs of this move in order for it to come all the way back? Or they see that there's enough volume, enough exposure, and enough attention from everyone in the market that they can continue the play? See, the key is if the interest levels diminish, they can't continue the play because there's only so much that they're going to do. They need to profit. They can't profit if there's no retail. They can't take the stock by themselves up to certain levels and then sell it, because who are they selling it to? And who's moving their positions? So quite a bit of common sense, but what I always say to you, like the way I understood this and what you're seeing in front of you right now, is I take note of everything I see. I map it out. I draw it. I don't just sit there, look at one thing and hope it works out and then figure out why it didn't. No, watch it. I keep telling you, like, watch your stocks. Follow their movement. Follow the patterns. See what were the variables within that one segment. And that's when you can start drawing understandings like this. This is how I created my option strategy. Nobody gave me this strategy. This was me taking what I know as a day trader, taking what I learned as options, and putting them together and using those prints wisely, but understanding next how these different builds work. Now, if you're looking at this in front of me, what is this very similar to? If you have been trading alongside me for a few years, what does this look like? The same as a what? It looks like a day trade. It looks like a day trade. Consolidation, then it releases up to the next level, consolidation, then it releases and moves to the targets. This is just done on a daily, this is done intraday, not same day. The time frame's different. Exactly, Trevor. And Trevor, you're spot on. It was a day trade. So that's all it is. Is that good enough to answer your question there, Sid?
Yes, that helps a lot. Thanks, Doc.
Absolutely. Okay, with that being said, this was supposed to be a 30-minute session. We're nearly at an hour. Hope you guys all enjoyed. Hope you're looking forward to Christmas next week and New Year's the following week. And 2025, I am sure you guys are really excited to see what we're going to conjure up. We're going to have the new presidency. It's been nice the last few months. And make sure you guys create your plans, go over these videos, use your time wisely over the next 2 weeks, and be ready for 2025, because market making strategies has so much going on. We're going to be introducing some really, really good stuff. And at the end of the day, our goal is very simple. We want to make you guys successful as traders so that you can take care of yourselves, impact others, help protect and secure the finances of your family, and just enjoy what we do here. Because at the end of the day, there is nothing more fun than trading. You all have a lovely morning, and I'll speak to you in the room.